That is a total registered silver stockpile of 16,267 contracts. Now, there are 32,025 contracts still open. That means here, from the math, 15,758 contracts have to cover within 2 days. That means there are 15,758 shorts that need to cover in 2 days' time. That is possible. We've seen that before. It's probably going to happen again. But if it doesn't, and that happened once too, then the eligible stocks, the stocks that are not for sale, are going to have to open up for sale in order to cover all of these shorts. Now, that means we might see some kind of short squeeze in silver, especially with the price going up lately. Well, hello there, my friends. Rafi here from the Endgame Investor. I've got a little bit of a new background this week. I'm in a different location. And this week, nothing really exciting happened in the world in silver. It's all pretty blah, war broke out and a few other things. We'll look at some charts and we'll go through some important fundamentals, namely that the monetary panic that will bring silver to the hundreds of dollars has not begun yet. This is not that. This is a flight to real assets that is infecting the entire commodity sector, but the ratio of silver to commodities has not risen, which means this is not a dollar panic, which is coming. First, this video is sponsored by Blackrock Silver, a silver miner headquartered in British Columbia. And why is that important? Because the Canadians are going to need silver very soon. If, as we've seen, they freeze bank accounts at will, eventually they will go after gold reserves and they will try to confiscate people's gold. Silver, less so because it is too bulky, which fundamentally is why you need to have silver with you, because if the state goes for gold confiscation, and in Canada, that is more likely because the Bank of Canada has no gold reserves at all, they will not go after silver. It is not worth their time. It is the people's money, and gold is central bank money. But anyway, Blackrock Silver has two main projects. You can see them here, one in Tonopah West, one in Silver Cloud. Tonopah West is in Nevada. They're less exposed to Trudeau's government, which is very dangerous right now. Nevada is much safer. In their latest news, Blackrock Silver steps out 350 meters, announces multiple high-grade drill intercepts at Tonopah West. These exploration stage companies with projects have a high likelihood of being bought out at premiums. I'm not saying that's going to happen specifically for BlackRock. There will be investor money flowing into these projects as it becomes obvious that gold and silver, especially silver, is needed as a monetary medium as we enter the end stages of this monetary endgame. Anyway, let's go to this week's charts, which are quite exciting. First thing I want to do is bring your attention to what is happening on the COMEX. This could be significant. We've seen things like this before, but we are 2 days away from March delivery. We'll go into the math about what that means right now. See here, these two little charts are from February 22nd and February 23rd. See here that the open interest in March 2022 on February 22nd was 39,458. That is the amount of contracts that are open in this active contract, which goes to delivery in 2 days. At the end of business day Friday, deliveries will start. Now, next day, open interest was down to 32,025. It fell by 7,433. Now, the question is how much registered silver, how much silver for sale against these futures contracts exists in the COMEX vaults? And for that, we're going to get into the next chart, which is this. Here is the chart of the currently available registered silver ounces, 81.33 million. Each contract is worth 5,000 ounces. It's not worth 5,000 ounces. Each contract is 5,000 ounces of silver. Now, if you have 81.33 million ounces of silver divided by 5,000, that is a total registered silver stockpile of 16,267 contracts. Now, there are 32,025 contracts still open. That means here, from the math, 15,758 contracts have to cover within 2 days. That means there are 15,758 shorts that need to cover in 2 days' time. That is possible. We've seen that before. It's probably going to happen again. But if it doesn't, and that happened once too, then the eligible stocks, the stocks that are not for sale, are going to have to open up for sale in order to cover all of these shorts. Now, that means we might see some kind of short squeeze in silver, especially with the price going up lately. And here, instead of going to the silver price purely in dollars, here is silver priced in terms of stocks. And this is a pattern that we've seen before in the precious metals markets. And I will explain it in terms of human action, why it is a logical place for silver to bottom in terms of stock. Here you have what is a double bottom that was marginally broken in 2022, early 2022. And from there, we have gone almost straight up. And we are through the 50-week and the 200-week moving averages in this chart. That is very bullish. In terms of the double bottom that was marginally broken, why does that make sense for it to be a long-term bottom, besides looking at this pattern and seeing a nice little peak here, and then a long bear market that we've had since 2011? We take a closer look at the Huey Gold Bugs Index. This is the precious metals stocks. It includes silver stocks as well. Now, the bear market bottom of late 2015, early 2016 in gold happened in November in gold and silver, and then there was a marginal break of this double, triple bottom here in early 2016. Right here was a marginal break. Now, when double bottoms like this break, usually that is a technical sign for people to sell off and capitulation and give up. If it's only a marginal break, that means the last holders have given up and sold out. But since the price could not get that much farther below that bottom, that means that the sellers ran out. You didn't have people panicking. You had most people buying that low. That is a marginal break of a firm double or triple bottom. And that is what we had just now in silver in terms of stocks, which means the swing from bubble stocks, from equities into hard assets, into silver, includes other commodities, but it's going to become primarily silver when the monetary side of this panic sets in. We have a firm bottom of silver in stock terms. As for the pure technicals in silver, the importance of these is to flip algorithms. There are trading algorithms that disturb us in the silver market, that suppress the price, at least the monetary price. When these technicals flip, they can flip algorithms. And that is the plus side of the manipulation that is seen a lot in this market, that once these technicals are broken through, the algorithms flip and become a tailwind instead of a headwind. That could be what is happening now. We have here a breakthrough of the 50-week moving average for the first time since March 2020, when the big rally to $30 started. We have here four tests of the 50-week moving average that all failed, and this one finally succeeded. We are at 25.50 right now. This is yesterday's chart, and it is February 24th. A breakthrough of this should establish 50-week moving average as strong support. From there, we should head to the silver squeeze high of 30 shortly, in a matter of weeks, I would say. And from between 30 and 50, there isn't much resistance at all. So once we get past $30, $50, I think is very possible this year, maybe by fall, if you want timing on that. In order to take advantage of that, there are certain options plays that I am taking advantage of in the Endgame Investor. If you want to see that, please sign up for a 2-week free trial. I want to clarify to people that it is very tempting to go crazy here emotionally and to get out of our heads and celebrate. It is not time to celebrate, especially because there's a war going on, and that is not good for anybody. What we have to understand here is that this is not a monetary panic yet. The price increase is exciting, true, but silver in commodity terms is still very low. It is still dormant. This is not a silver rally. This is a commodity rally, which means this is a flight to safety all over the world into real assets. But there is a flight into the dollar as well. because the dollar index is way up today, which means there is no dollar panic. A pure monetary panic means that gold and silver rise in real commodity terms. We will see gold and silver, especially silver, rising in many multiples relative to other commodities, which means the dollar is being abandoned as the monetary unit for those commodities in favor of silver and gold themselves. This is not happening yet. When it does, you will see increases in silver that will literally make you dizzy as we head to the multi-hundreds of dollars at least. As much as we see these pictures in our heads of hundreds of dollars for silver and how theoretically happy it will make us, it's still going to be a scary world. It's going to be frightening, and we have to keep our heads and understand that the world is going to need our silver as a medium of exchange, because when money dies, when the dollar dies, it is the division of labor itself that is in danger, and the division of labor is what keeps our species alive.